Okay, so let's do restaurant industry. Now, the thing about this industry, it's growing over time. So we can see that at the level of sales from 1970 to this year, and we can see that it's steadily growing. So in 2010, they had about $586 billion in sales. Now they have 798 billion in sales. So quite a good growth. And every year, more and more people, they dine outside instead of cooking at home. They prefer just to buy it out and eat out. And like at least in Australia, in Sydney, sometimes it's cheaper to go out rather than cook at home. Like if you could spend this out to work or to cook your food, definitely it's probably cheaper to work, make 20-25 bucks, even if it is at low rate pay, and then to buy food for 10 bucks, right? So sometimes it makes sense, something like that, rather than to go to the shop and buy the food and then spend an hour to cook it and stuff like that. So more and more people decide to use restaurants as a mean of kind of, not already like a fashion going to occasion, but like on a daily basis, a lot of people use restaurants and small coffee places to eat. Okay, that's definitely. But also it has high level of competition. And the level of competition here, it comes from corporate, chains of restaurants, but also from individual owners, private restaurants. And that's actually the big thing about it, because to open restaurant, it's quite easy. You just have to rent a place, buy equipment, and that's it. You're in business. But the thing is that a lot of those guys, they don't know how to compete only on price level. They cannot optimize their resources. They don't know how to set the systems, etc., etc. And the only way they compete is just by price. And because very often they can't calculate their cost properly, what happens that they sell actually below value. And that's why it's quite tough to compete within this industry. I know quite few owners of restaurants, and I know how they calculate their costs, and it's really, really wrong way. They don't take into account a lot of expenses, which, for example, accounting expense, which they pay once a year, right? Or lawyer expense, which they pay like a couple times a year, or something like that. Those expenses which they pay occasionally, very often they don't take into consideration, and when they come up, they're usually in trouble, and they try to find the money or borrow money or don't pay their suppliers, and etc., etc. And at least in Kogarah, where I live, I noticed that in one location they changed within the last 4 years already 3 restaurants. So one restaurant has opened, closed down, then another one opened, closed down, the third one now is in operation. So how long is it going to be? I don't know. So very often I believe, I think that the only people who make money, probably owners of premises, like landlords, not the restaurants itself. Yeah, but that's the reason why, because they have high level of expenses. The rent is crazy, but also the expense, like human resource expense, because the salaries are very, very high, and that sometimes drowns the cost so high that owners, after paying money for rent, for suppliers, to wages, they have no money left for themselves. And owners, very often, they work the hardest. They come at 6 o'clock, they leave at 9 o'clock p.m., and still they don't make any money. And eventually, when they give up, they close down the restaurant. The only restaurants which operate smoothly, which have very good systems in place, where they can have control proper in place. For example, if they have certain system to control the expense, they don't buy, because a lot of restaurants, they buy too much food, right? And after that, they have to throw it away, and it's all expense. And quite often they buy not enough food, and after that they have to buy, for example, milk. They don't have milk, so they cannot wait for 2 days until their supplier brings that milk. So they have to run to supermarket and buy milk at the highest price. Okay, that's the problem with a lot of restaurants. So they don't have this system in place, and because of that, they constantly overpay for those expenses. Okay, and only like restaurants like McDonald's, like Starbucks, Cheesecake Factory, like big chains, they have control over it. They teach people how to do it, you know, and that's why they can create the profits, not like individual restaurants, which probably suffer more than making money on that. Dory writes, Alex is agreeing. Dory, sometimes because of the rent, it is not worth closing down early as the contract for rent is too heavy to pay out. So it's easier to just keep it. Yeah, you're correct. Absolutely, absolutely. Quite often, like people don't know how to exit. A lot of owners of restaurants, when they sign this lease, they don't know how to sign this lease, because very often what I know, it's, you know, coaches, they motivate people to open the restaurant, and they say, oh my goodness, because that's the easiest way to start a business. They borrow money from their friends, family, etc., open the restaurant, and when they are motivated so much, they don't pay attention to lease. They don't negotiate it properly. Okay, and that's what you need to do. So a lot of people, a lot of restaurants suffer because of that. Yeah, absolutely, Alexei. Yeah, I know so many restaurants where owners, they work as everyone. They open the restaurant at the very beginning. They prepare everything for them. You know, after that, if there is no waitress, they work as a waitress. Sometimes they clean after that the restaurant when everyone leaves, because they don't have money for cleaner. So yeah, owners, they do all the jobs. It's not the guy or girl who sits and counts the money. No, believe me, that's mostly the most hardworking people in the different industries. That's the restaurant industry as a whole. If we look at what I did, I went to Finviz and look at this index, right? So it's 55 stocks here, okay, included. And you can see that from last year, it was growing up, but starting from May, it's dropping down. The Cheesecake Factory, if you look at their stock price, it dropped specifically from May quite a lot. From 60 odd numbers, it went to $40. So it's nearly 45% in drop, like a loss in share price. Okay, some companies like McDonald's, it kept growing. Okay, and that's why this index slowly went down, but still it's in profit. Okay, that's in total. That's Menu. Menu is USCF Restaurant Leaders Funds. It's like ETF, but not ETF. It's a money fund. Guys, you know the difference between ETFs and money funds. What's the difference there in trading way? Do you see that it's kind of gaps all the time and then flat lines? Do you know why? Because ETF, you trade during the day, so you can buy and sell like shares. Funds, you buy only on the closing price, so you trade only once a day. So you don't know how much it moves during the day, but you trade only at the closing price. That's why you see these gaps happen all the time. Okay, so but that's the shows. Look, it was about 19 here, around 19, like 1860, and then it went to 60. So it's nearly $3. So it's 50% drop, right? So in total, a bit more than 15% drop in this Menu. So it's like ETF on this retail. So, and you can see that 2 days ago it jumped quite a lot, about 7% jump. So that tells us that maybe this downtrend is over. Now, when you look at the industry analysis from Value Line and read it through, I hope you did it, you will see that the reason why a lot of companies dropped in price, because the second quarter reports, they weren't that good. Okay, they were quite bad, and some companies from profitable went straight away to negative, to unprofitable, to losing money, and quite a lot losing money. So not like a small like drop, quite a lot. And because of that, when one company in an industry shows bad reports and results, other companies, they go down as well. And the reason, like I believe, the reason for drop in cheesecake prices related to that, because cheesecake, we'll see now, it doesn't really drop a lot. It's kind of flat at the moment. It didn't drop a lot, but still making money, good money, and the fall which happened, it's not justified by whatever happens on the market. Okay, so it's overreaction. It's in my belief, but again, so I definitely recommend to read it, and you will see that that's the major reason for drop. It's like in prices, because a lot of companies, they performed not well enough. Not all of them, some of them are pretty good, but a lot of them. Now, if you look at the size level, you see that McDonald's is the biggest, Starbucks the second biggest, there are a few more, probably Cheesecake somewhere here in this line, so you can see him. That's Cheesecake here. So we can see that safe it is 2, so pretty safe, and time is 3. So based on value line report, it has average growth potential with the next 12 months. Okay, that's about Cheesecake. Now, when I look at again on Finviz, 55 companies were all together. I put only 4 parameters in my restaurants. One, optionable and shortable, because I'd like to have an opportunity to sell calls and buy puts, and sell puts. Then I looked at PE below 15, and then a target price. That's expectation from other analysts above current price. So that's for growth. And out of 55 restaurant companies, only 4 left. And you can see that Cake is one of them. And it's not the cheapest one based on PE evaluation only. Dean is one of the lowest. But if you look at Dean, right, so you will see that the sales level is dropping down. So you can see that sales past 5 years is going down instead of going up, whereas Cake is growing. Earnings per share next 5 years growth expectation, and last period growth as well. So, but you definitely compare, and in the end of the class, I will ask you to analyze EAT, this one company, and one more. It's not on that list, it's because it's a bit above P ratio, above 15, but I believe that that company is pretty good. But you analyze it yourself, and you see why I chose Cake instead of, for example, EAT or another one, which I will tell you at the end. Okay, which is called VGRI. Okay, so that's how I come up with this. And okay, based on industry, is all clear, guys, about industry? Okay, great.